Welcome back to the channel, everyone. Today I want to talk about some insider information about the AMC squeeze that was just leaked and the repercussions that Avi is currently facing as a result. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Avi recently tweeted saying 2 people reached out to my employer's compliance department about me. If you didn't already know, Avi is actually a licensed financial advisor that holds both AMC and GameStop. He said it just so happens that 2 people on Twitter threatened my job last week, Friday, after I posted about the backdoor conversations on Wall Street regarding AMC. Now you may say, okay Tom, why do we care about the backdoor Wall Street conversations that Avi just overheard? Surely this is just some guy making something up. How do we know that Avi is a credible source? AMC supporter tweeted saying Avi, real name Savendra, wouldn't risk his license for lies that he's just made up about a backdoor conversation. His license is CRD number 5703273. He currently works with Equitable Advisors LLC, CRD number 6627. Avi also previously worked at JP Morgan and also the PFA as well. Avi tweeted saying, I have nothing to hide. I see and I hear things on Wall Street, and if people want to disagree with me, that's absolutely fine. But I work in the field and I know a thing or two. He said I can get in trouble for speaking about AMC because it's such a do not talk about topic right now on Wall Street. Obviously this is a tweet that he tweeted on the 19th of March, a few days ago, and now he's being forced to close his Twitter account. This is a screenshot of Avi's trading account where he holds $624,000 worth of AMC, which is a massive position. Avi actually tweeted the backdoor conversation that he overheard that said this AMC thing is a mess. We messed up big time. Everyone messed up. We don't have the money to cover. Nobody does. They said there's not enough money to end this. I don't know what will happen, but we are willing to pay the SEC $500 million to get out of this. Now obviously this was then followed by a number of different hedge funds turning on each other, like Citadel and Point72, both withdrawing their investments from Melvin Capital. And Avi tweeted saying, patience, the things I'm hearing is that there's desperation on Wall Street. Short sellers, brokers and banks are all in trouble. They are trying to negotiate with the SEC to help them escape this. A bailout will be needed for them once this starts to rip. Now you may say, Tom, this just sounds like absolute rubbish. Surely there must be some actual factual information that can back up what Avi is saying. Well, Cointelegraph just tweeted saying breaking news. A senior executive at one of the world's largest trading houses is warning that the trading house may collapse. Now that to me sounds like there is absolutely desperation on Wall Street if one of the largest trading houses is just about to collapse. Now you may remember this tweet from the other day where I spoke about why the hedgies can't let AMC above $22 per share. Avi tweeted saying a new AMC update from my source, the same institutions that say they messed up with AMC and can't afford to cover, along with many others, is also saying that Wall Street needs to keep AMC below $22 per share and for it never to go above that price. Now obviously I spoke about this in my video the other day because I think that if AMC runs over $22 per share, Melvin Capital will likely end up being liquidated. Melvin didn't get liquidated back in June when AMC ran up to $72 per share because they had a massive amount of unrealized profits sitting in their portfolio. They had tons and tons of investments in Facebook, in Affirm, in Snow and tons of other stocks that had massive amounts of unrealized gains, whereas now all of those stocks are setting new record lows and those gains simply don't exist. Because those gains don't exist anymore as Melvin took massive losses, Melvin Capital's current margin is substantially lower than it was back in June. Citadel and Point72 have also withdrawn their investments from Melvin Capital, and therefore even if AMC only runs a small amount, Melvin Capital is likely to be liquidated. Now obviously looking at yesterday's and today's current price action, obviously in the pre-market we saw AMC run up to around $20.76, just shy of $21 per share. But so far in today's trading, AMC has run up and briefly touched $22 per share exactly before pulling back just a touch. Now interestingly, Avi also overheard that AMC is going back to $48 per share very soon. He said, I can't give you an exact date, I will repost this once it happens. Guys, if you didn't already know, Moomoo and Futu have just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. With Moomoo, you can currently get 5 free shares valued up to $3,500 each, which is a total of up to $17,500 in free shares, and another free share on top of that with a guaranteed value of $20. All you have to do is sign up to Moomoo using the link in the description below and make your first deposit. The more you can deposit means the more free shares that you get. Moomoo is also a brilliant commission-free trading platform with tons of technical indicators and advanced charting tools. Moomoo publishes daily short-selling data, position cost distribution, and much, much more. Moomoo is also incredibly easy to use and will help you to trade like a pro. So guys, be sure to sign up to Moomoo using the link in the description below to get all of that free money. Obviously, he says this is not a recommendation to buy, sell, or hold, even though Avi is a licensed financial advisor. This here is only for entertainment purposes and not specific financial advice. Now you may say, okay Tom, if AMC breaks $22 per share, how is it going to rocket to $48 very quickly unless Melvin Capital ends up being liquidated at $22.01 per share? And I think Rico did an excellent job of explaining this, and it's because there's a massive void between that $22 region and that $40 region. There is a very small amount of current buy and sell orders between $22 and $40 per share. I want to quickly show you exactly how Rico explained it in his video.
Oh man, let's see what happens tomorrow at open, but remember what I said. Once we start breaking 22, we're slicing through this shit. There's no volume here. There's an air pocket up to the golden pocket at 37.75. This is a parabola.
So obviously if we look at Rico's screen here, we can see at this current level there's quite large blue and orange bars. Below $10 there's some massive blue and orange bars where there's tons and tons of buy orders. But above this current level between $12 and $22 per share, this area above between $22 and $37 per share has fairly small blue and orange bars in comparison to below $10. Now these small bars are obviously representing very few buy and sell orders, and therefore as soon as AMC pushes above $22 per share, it's likely to slice all the way to $37 per share and above. And this is likely why those Wall Street backdoor conversations don't want us above $22 per share, because it's basically a clear shot from $22 to $40 per share, and right there is likely where there's going to be a number of funds being liquidated. Obviously, I think it's quite unlikely that Melvin Capital ends up being liquidated the second we go past $22 per share at $22.01, but I do think Melvin Capital could end up being liquidated on the push back to $40 and above. And obviously, if Melvin Capital end up being liquidated, they're going to be forced to buy back and cover all of those short positions, including all of the synthetic shorts. Because as I've explained a number of times on the channel before, when Melvin Capital ends up being liquidated, Melvin Capital themselves aren't in charge of the liquidation, choosing which shares to sell and which shorts to cover. There's a third-party firm of accountants that's appointed to perform the liquidation for them. That third-party firm of accountants will go through Melvin Capital's books and all of their trade history and ensure that every single trade ever placed by Melvin Capital is unwound. They'll ensure that every single share that Melvin Capital has purchased and currently holds is sold, and they'll ensure that every single share that Melvin Capital has shorted, even the synthetics, is covered as well. Because obviously, even though Melvin Capital doesn't report the number of synthetic shares that they've shorted, they still have a record of that trade because there was a trade placed between two people, the trade between Melvin Capital and the market maker, likely Citadel, to create those synthetic shares. Now also if we look at the AMC 4-hour OBV, which is the on-balance volume, we can see that AMC is starting to break out of that OBV indicator all the way back from June. We know that over the last 6 months the price of AMC has fallen significantly from $72 per share down to $22, but the OBV has stayed fairly linear. AMC's OBV has now broken out of that flag and has just broken out of those all-time highs set back in June. And I think someone that's very much aware of the AMC and GameStop OBV breaking out is Ryan Cohen himself, who just tweeted saying, "I put my money where my mouth is." You can see here during yesterday's 20+% run for GameStop, Ryan Cohen purchased an extra 100,000 shares. Most of these shares were purchased somewhere between $96 and $108 per share, and interestingly, Ryan Cohen didn't place this as one large block trade through the dark pool. He placed this in tons and tons of smaller trades. You can see here Ryan Cohen purchased 1 share, 2 shares, 98 shares, 169 shares, so very few of these trades were large block trades, and also very few of them were also not round lot trades either. Therefore, basically every single trade that Ryan Cohen placed yesterday went through the IEX exchange, and none of these trades went through the dark pool because they're too small to be large block trades. Now, I don't think this is what caused GameStop's 20+% move, because at the end of the day, Ryan Cohen only purchased 100,000 shares. Yesterday there was a total of 15 million shares traded, and today there's been a total of 21 million shares already, and therefore 100,000 shares is a very, very small fraction of the total shares traded. Now, I do think it's important to remember that a large majority of these trades and a large majority of this volume is fake volume being created by those high frequency trading firms. These high frequency trading firms trade tons and tons and tons of shares between each other, taking advantage of that bid and ask spread. I think the current estimate is something like 60 to 70% of all trades are performed between high frequency trading firms, and therefore 60 to 70% of this volume is basically fake volume. However, even if you remove the 60 to 70% of that 15 million shares traded, you've still got 5 million shares traded, and Ryan Cohen only purchased 100,000 shares, which is still a small portion. If we compare this to AMC, yesterday AMC saw 81 million shares traded, and today we're already over 140 million shares. The last time we saw 140 million shares was back here on the 17th of December, and the last time we saw more than that was all the way back in August the 25th. And therefore I personally believe that the reason for yesterday's move and today's move as well is simply because the hedgies are being overpowered, not caused by Ryan Cohen purchasing 100,000 shares, which is fairly small fry compared to the total trading volume. Guys, be sure to let me know down in the comments below what you think about this insider information being leaked, and whether you think AMC is going to push over $22 per share. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.